investmentstrategy.com.
Hi, this is Chris again, looking at the upcoming Thursday, September 11th trading session. In front of you, I have the economic calendar, and as a result, we look at the economic announcements coming out. Don't see a whole lot. There's only a couple that I'm going to pay attention to. One is the German CPI. This is anticipated to come out as flat. And if it comes out anywhere near that, it should have zero effect on the market. However, there is the possibility that it comes out better than anticipated. That could be good for the DAX and possibly good for the euro, or vice versa. So we'll have to see how that plays out. After that, I really don't see a whole lot until we get to initial jobless claims out of the United States, anticipated to be 300,000. Remember, this number works in inverse, so the higher the number, the worse news that is, because it's more people applying for unemployment benefits. So, on a lower than anticipated number, we expect the stock markets in America to do fairly well. They all look well supported anyways. And then on a larger than anticipated number, we would expect them to sell off. So we think this number is going to be a U.S. stock number more than anything else. With that, and not a whole lot in the way of announcements, let's take a look at the technicals on the charts to see what they tell us. The first thing that I would bring to your attention is the Dow Jones Industrial Average. It looks healthy to me. 17,000 held as support during the session on Wednesday, and it looks like we're just going to simply grind 17 to 17,150. I think buying calls is the way to go, especially above the 17,050 area. Short term, I'm not looking for anything major. I'm not looking for any miracles, because let's be honest, we've gone a bit parabolic in this region, and it makes sense that we would take a breather as the smart money comes back into the marketplace after holiday. And this, of course, is the euro dollar. As you can see, still looks horrible. More pain for the euro during the session on Wednesday. I still see 130 as a bit of a roof at the moment, so if we rally, I'm willing to buy puts at that point in time. I still think we're going to 128 below, so that gives us about 100 pips or so from the time of recording to move. It really isn't until we clear this gap up here at 132.5 that I would consider going long or buying calls. So this is a buy puts on rally short-term chart type of situation. Looking at the DAX, you can see we fell a little bit during the session, but found enough support down here to convince me that we're still trying to find our footing, that we are eventually going to go higher. I recognize that 9,800 is a barrier, and 10,000 most certainly is a barrier, but 10,000 is actually my target. We've had a parabolic move, much like the stock markets in the U.S. We may just need to take a little bit of a breather. Buying calls on dips will more than likely continue to be the way to trade the DAX. And finally, you can see that crude oil has broken down and does look like it's destined to go to 90. So at this point in time, all you can really do is buy puts on short-term rallies until we get to that $90 level. Buying a call is so far out of my head right now that I don't even have a scenario in which I would do so. With that, I've looked at the Thursday, September 11th trading session.